Hi there, it's Walter here from FX Jake, and you're at the Daily Trader. And what I'd like to show you today is a really cool trading system that allows me to get into trades even when I don't have specific candle patterns. As you probably know, I like to trade the big shadow, kangaroo tails, whammies and moolahs, things like that. Now, for this setup, I actually don't need to have a precise candle pattern for me to take the trade. And let me show you what I mean by that. This is the Euro US dollar 1 hour chart. And what we're looking at here is the markets. I've drawn all the support and resistance zones here. So you can see where the market's bounced here. Here it's bounced. There it turned around. Didn't turn around there. Caught in here. In fact, we're actually caught right now between these two levels here. So what I'm going to wait for is a breakout. Let me go ahead and show you where I'm talking about. So this is my box here. And I'm caught between this zone here at 42.81 and 42.21. So it's about a 60 pip range on the 1 hour chart. And you can notice a kangaroo tail down here. What I want to do is I want to wait for the market to break outside of this box. And then go away from the box for a while. So there's another kangaroo tail on the edge of the box. Okay, so now it's come outside the box. So what I want it to do is come back down to the edge of the box and give me a nice bounce, basically. Well, we didn't get that, so we'll extend the box further. And I'll show you why we call it the bend trade, because we actually see a bend on the line chart. That's why this is the bend trade. Okay, now this is a breakout outside the box. So now, again, sort of like this one up here, once the price moves away from the box, I want to come back and touch the edge of the box and bend. Like that. If I look at the line chart here, you can see exactly what I'm looking for. Here we've had price in the box. We had a fake out here, fake out there. Even this was a fake out because price never came back to the edge of the box to bend at the edge of the box there, bend upward. Here we see a breakout beyond the box and price has come up to the edge of the box and bend downward. So now that it's bent downward, I can actually take a trade. And I'm going to take a sell trade here at market, right? Because I've got that bend. This candle is closed. This is a 1 hour candle and it's closed right there. My emergency stop loss goes in the middle of the box, which is about 49 pips of risk. And I'm going to target this level down here just above it, which is about 55 pips of reward. Now what I want to do is put on, I'm actually going to do a few more as well. So I'm going to do another sell. Stop loss goes in the middle of the box, but I will close the trade if the market closes inside of the box again. It doesn't have to hit my stop for me to get out of this trade. I got another one with the target down here, and then I'm going to do one more sell trade. My stop loss again, middle of the box, emergency stop loss 49 pips away, and then my take profit is just above this zone down here for 214 pips. The great thing about this is if it does come back up and close in the box, I'm out long before my stop gets hit usually. So I don't usually take the full stop on these trades. Okay, so that's great. So if you look at the line chart, you can see that that bend, in fact, did determine, it looks like, the turning point there. Now, if I look at just these two candles, that doesn't really tell me anything. That's not really an ideal candlestick formation here. It's not any sort of big shadow or kangaroo tail or anything like that. It's just a bullish candle followed by a bearish candle. All right, so we've hit target 1 here. I'll keep going here in Forex Tester and see if we get target 2 yet. I'm actually going to move my stop to break even because I don't want to see these trades turned into losers at this stage. So I'm going to move those to break even, and we'll let it roll. Okay, we've hit target 2 now. What I'm going to do now is actually move my stop on the other side of this zone, because if the market comes back up, I want to bag 50 pips. So I still have that last lot there. So I'm going to modify the order, move my stop loss to just on the other side of there. So I'll bag 53 pips if I do in fact get stopped out at this stage. But I'm still hoping for the market to go all the way down to my target down here, which would be great. Wow, it's going to go. Oh, I just missed it. I like to move my targets a little bit above a zone on a sell trade because I want to make sure that it's hit. So there you go. And it looks like price is going to bounce there as well. So that's an example of a bend trade. Again, the critical thing here is that there's a well-established zone like this one down here. This was 42.21 on the Euro US dollar back in 2011, May 2011. And the market broke through it cleanly with this candle, came back up and bent at that zone. You'll probably see this across the board. You don't need to wait for a consolidation to actually see it. You just need a well-established zone. So if you look at, say, if you look at right here, here you have a touch of this zone. This is the 4280 level. You get a touch there, and you get another touch there. So right now we say, okay, this is a well-established zone. We've got two touches here. And price comes back up here to this level, comes down here, briefly pauses, breaks through that level, briefly pauses again with an almost kangaroo tail looking thing. It's not though, because the open and the close of that candle is not in the top third. But then it cleanly breaks through with this candle. And that's really the key here, is that this zone has been broken through with this candle here. So now what I want to see is the market come back up and touch it, and that is right here. So if I go right here, that's where I'm going to see that bend on the chart. So that would be another example of a bend here. So what would I do? Well, if I was going to take that trade right there, I'd sell when that candle closes. I put my stop beyond this zone. It's an emergency stop, so it would probably be up in this area, and that would be about 80 pips of risk. Now, if the market comes back up here and closes above the zone, then I'm out anyway, and I'm out long before my stop is hit. That's just an emergency stop in case things get out of hand. Where would I target on this trade? Well, I'd have to target down here, since I'm already really close to this zone right here. I'd expect the market to break through that zone, and it actually eventually does after a minor bounce here. And does it come back down? No, we're actually stopped out here.